Hello, trading has closed on May the 11th, 2022. We'll do our disclaimer, go over the YouTube software issue we had yesterday, and then make some predictions. It's my trading plan for tomorrow, May the 12th, 2022. Remember, I can be completely wrong. Anyone trading on this does so with his own risk. Well, yesterday, I made my video the same way I've been doing it for the last 11 years. For the first time in those 11 years, when I chose from the possible sign-in screens, and YouTube gives me a choice of 3, the one I chose wasn't the one that showed up. Maybe that should have alerted me to the fact that something was not playing right with the software. I clicked on public and closed it out. When I got up this morning, a number of people told me the video was private. They couldn't access it. Figured that was no problem. I just go to my channel and change private to public. Well, it was so private I couldn't get in. So something went wrong, and that's why I made the backup video earlier today, which summarized but didn't go over everything I said yesterday. When I made it, futures are way up here. This looked completely out of reach, 39.86, 37. But after the inflation figures were announced, it did print. There was resistance right at that price. This green line is an old FOMC announcement price, and these are support resistance levels as well. I think it pays to keep track of what they are. Look for the pattern with the early low. Tomorrow should have the early low. Early low pattern features an early low, a midday drop, and a late high. That's what this is. Normally it's a positive pattern. Normally you close near the high. When it's weak instead, it should lead to more weakness, unless you gap and promptly take out this high. Tomorrow's open can substitute for today's close. So if we gap and we open up here, or at least gap and take this high out promptly, all that weakness goes away. It's a very, very tall order, but as we'll see, I don't think it's impossible. During the day, MEJT said this drop wouldn't stick, it was false. Said this rally wouldn't stick, it was false. I just went over that line. Said this drop wouldn't stick, it was false. Price it would retrace, and that's already played out. Well, here's what we said yesterday. We said we're close in terms of time to our target price. We actually hit the target today. I said there was a fan 1 by 1 line, which we showed. I said either you gap under it or the line wins. We traded under it. We didn't gap under it. Makes me suspicious of today's drop. I've changed the background color on this chart, but it's the same chart I've been showing. You see high volume on the E-mini contract. It's typically associated with panic liquidation of stocks. It tends to occur near lows. It isn't a pinpoint indicator. Doesn't mean the low has to come right here, but we've been having panic selling for a week now. Don't forget, a week ago we closed over 4,300. We've had almost a 400 handle drop in just a week. Well, this was my long-term target, 39.0932. We came within 18.5 handles. That's close enough for me. Now, this is the end of an ABC pattern, if I read this right. It doesn't have to be the end of green C. Frankly, I'm being more attracted to the 3,000 level before this is over, but it certainly could be the end of A of green C. Until today, I couldn't make the waves balance another time frames, and today is the first day I was able to make them balance another time frames. Let's see how we did it. Here's your ABC. Here's your target within 4.5 points. Wave gray C. is equal to wave gray A, so it's a candidate for a low. Let's look at gray C. Well, I had this gray C. I had this as an A, B, C, but that's not the only place A has to be. You can put A here. You can make this an ABC, this an ABC, and that wave C. And if that's A, wave C's right at 78.6. That's balance. Let's look at wave black C. And the number of prices I thought would have wave balance came close to this one. Well, I'm dividing wave dark blue C into an A, a B, and a C. If you look at red C, there is a gold A, which is a clear 5 waves. There's a gold B, and then there's a gold C, which is a clear 5-wave pattern. And if you set gold C equal to 0.618, target's the top of gold A. And if you have red C, red A is pretty close to the 78.6, so there's wave balance there as well. First time that's happened. Doesn't mean it's the only number that works, but if that holds, it works. Here was the Gann fan 1x1 line we showed yesterday. We didn't gap under it. Makes me suspicious it's a false break. Now Friday is F22, Carol Ann's spiral calendar date from the August 9, 2011 panic low. Now this, because it's the spiral calendar date, doesn't mean it has to mark a low. I mean, we've had F19, F20, F21, those didn't mark lows. But if there is a panic low, if today was a panic low, it falls within the time frame, which is 3 days. 2 days is within the time frame. So if it does stop here, it balances. This is the time I wanted, and that's the price I wanted for a low of this drop. Doesn't mean it's the only time, doesn't mean it's the only price, but if we rally from here, at least you can explain it and it works. Tomorrow's pattern has the early low. It could still gap up. Today's normally bullish pattern was bearish instead. Should lead to further weakness unless we gap and promptly overtake today's high. That's a tall order, but if it happens, we have all we need for a very significant bottom. There's wave balance at the low. Sentiment readings are off the chart. The American Association of Individual Investors shows the fewest percentage bulls in 30 years, according to Schwab's Liz Ann Saunders. I was also told that the bull-bear spread, with bears predominating, has never been this wide for this long, ever. New highs, less new lows, reached a peak seen only near significant lows. We're within the tolerance of a Carol Ann spiral calendar date during which a panic low can occur. Now, the producer price index data comes out tomorrow at 8:30 Eastern Time. I have no idea how the market's going to respond, but if it likes the numbers, I can't rule out the type of gap and rally which should mark a low. I see no reason for anyone to jump the gun, because if it is a low, it's going to last for quite some time. So, and all the way down where I've been saying we're close in terms of time, close in terms of price, today's low was the first one I can make fit. It's a tall order to make it fit. We're going to have to gap up and take this high out fast. But if that happens, I think it's bombs away on the upside. Till that happens, you can keep your powder dry. Tomorrow has the early low, but if we gap up and take this out, the party's beginning. And that's today's call.